How's it going? Welcome back. It's Jonathan. Been a little while. Yes, still out and about traveling. I'll be back in Australia in about a month. However, I've got some time between the Vietnamese typhoon that's occurring now to go over a few things. And I thought, while the rain's not on, let's get a video out. So we're going to be going over the Bitcoin cycles. Okay, so this video is about Bitcoin, and it's going to give an update on Bitcoin out until December, just on where we're sitting, what we're kind of looking for to occur. Again, just my opinion only. However, I do think we have a pretty good track record of basically forecasting the long-term waves of the market without doing daily updates. You know. A lot of these other YouTubers out there, they come out with these daily videos, obviously to get the ad revenue, and they're telling you what is the daily price action of Bitcoin. However, I think that our longer term view has been more accurate than these guys, at least over the last several years, and I wanted to keep up with that, okay? So, to start off, I just want to premise this just with two chapters of the book from Louise McWhirter. Okay, if you haven't got the course, we do have a full course on Louise McWhirter's program, with version 2 coming out in hopefully 3 to 4 months. I'm just still repatching up a lot of the tools and finalizing the use cases for these tools. So if you haven't got that already, you can join and get access to that. Obviously, if you want the GAN Mastery program, which includes the McWhirter program and includes all of our future courses, it's kind of like a one-stop shop, get access to everything. You're basically helping to bootstraps, whereas I can go out and get more courses, spend more time on these programs for you. It's currently 50% off, and the reason why I did that is because I get a lot of messages in my inbox, and I get a lot of messages from people saying that they wish they could join, but they just don't have the funds. So it's currently 50% off, and I've got the coupon open for 10 people. So if you're one of those people, if you feel like you really want to get in, but you don't have the means to get in, it's currently 50% off, okay? 10 people only. Choice is yours. So the theory of forecasting future trends of the stock market and trend of business, as outlined in this book, is based on sound astronomical law. The law is here. It only needs to be applied to bring economic independence and a more abundant living to every man and woman in this country. The way conditions exist today, man is the victim of the business cycle. With detailed charts and graphs, he can tell you when businesses began to pick up and when the recession started, but he cannot tell you those factors in advance with all his statistical research because he has no time factor. Let's head down to page 9. And again, you see all this highlighting, we have analyzed this book in full. The practical application of this theory should bring economic independence to a greater number of people than ever before. It shows how to analyze years in advance business conditions, crop, wars, and other factors which have such an important effect upon security prices. It shows you when to get out of the market and when to get in. I apologize for talking so fast, but I just want to get through this bit. Which are two of the more important things a trader must know? Everything needed for the study of this theory is contained in this book and can be practically applied. The rise and fall of stock market prices come in definite intervals of time or cycles which follow the curve of business volume and activity. The rise and fall of prices is governed by a law of supply and demand, which is in turn governed by the law in the universe, unknown or ignored, known as the law of action and reaction, which just simplifies the whole effect, okay? Periods of business prosperity and depression are not man-made nor the result of chance. They come at regular intervals, the same as the seasons and the same as astronomical laws which govern nature, govern man and all of man's activities. When this fact is recognized, man will work in harmony with the forces of nature and not blindly against them. I just want you to remember that this book was written in 1937 and it can be forecasted indefinitely out into the future, okay? At the present time, a planned investment program based on the laws of nature which govern supply and demand is an unheard of thing. It is not, however, an impossibility in the near future when man turns from disturbing political factors long enough to see that business volume and the fluctuations of the stock market defy administrative control. They will begin to wonder, what is the law behind it all? No administration can make depression and no administration can make prosperity. I want you to think about Donald Trump right now when you read this. No administration can make depression and no administration can make prosperity. Okay? I won't go into the Trump theory right now. Let's just keep going. Business cycles occur of their own accord at regular intervals despite the government. However, by acknowledging the law of nature behind this theory, administrative heads in the future can plan ahead for depressions and not be caught in the midst of prosperity by change business cycle and the financial panic. When this sort of preparedness takes place, the time will come when there are no depressions, because man is already prepared for a rainy day and has more than enough to tide him over lean years. When the cycle changes and the business curve starts upwards again, man will be able to invest again like the farmer watches his seeds grow. It is no longer necessary to be wiped out in the stock market. That is a sign of ignorance. Okay, so with that said, just keep in mind that no administration can make depression and no administration can make prosperity, and everything happens according to the natural laws of the universe. Now, what has that got to do with Bitcoin? Well, actually, not too much when it comes to what we're going to be talking about today. However, it is a really good prelude into this whole thing, okay? So today I'm going to be covering the hidden cycles in cryptocurrency. I'm not going to be covering it any more than I already covered it in this just this special report I did for the 2024 forecasting guys. However, I'm going to go over this, and we're going to see what's now, we're basically in September now, so we're going to go over that, and we're going to see exactly how things have played out, okay? So let me just, let's just continue, okay? And towards the end of this video, I'm also going to give you the updated McWhorter theory out until the end of the year, so stick around for that because I'll just drop it in randomly. So let's take a look. It wouldn't be fair. I'm just going to read this, okay, because I don't want to sort of change my thought process. I just want to read it how it was, how I saw the markets a year ago. It wouldn't be fair for those joining us for crypto-specific content not to provide a few variables for the outcomes of 2024. So let's dedicate this to the crypto enthusiasts. Can I make it bigger? We know that everyone follows the 4-year Bitcoin cycle. Okay? We know that the 4-year Bitcoin, but what if the 4-year Bitcoin cycle isn't the only cycle at play here? What do I mean? Well, if you're familiar with my work over on YouTube, you'll know that I use the 90-day Bitcoin cycle to gauge market direction. I discovered this in 2019 and showed you how it works. Actually, I'm going to show you in this report the 90-day Bitcoin cycle using Fourier analysis. However, I manually found the 90-day Bitcoin cycle basically with a technique that I can show you in the future, and it will be released to the Game Mastery guys on how to locate these cycles, the manual way for those who don't have, these fancy tools. But there are other cycles at play also, some very unknown cycles. To find these cycles, we need to perform Fourier analysis. With software, we can basically turn several hour task of manually finding these cycles into just several minutes. And this is basically what I was saying with the 90-day Bitcoin cycle, where I had to do it manually. I had to get an Excel sheet, write down the start of the end date of the cycle. And that's how, when I showed you those videos in the past, I was able to show you how much I'd done in the past, and I had it on the chart, and I was able to then continue that into the future. It's very, very powerful stuff if you do it manually. However, for the purpose of doing a report, we've got to automate that task somewhat. So what is Fourier analysis and how can we use it? We got to use a parallelogram. The parallelogram is a tool that uses a mathematical process called the Fourier transform to analyze cycles within a set of data based on techniques developed by JM Hurst. It identifies which cycles are most prominent by showing peaks at certain cycle lengths. Unlike a typical time-based chart, the parallelogram plots these cycle lengths against their strength or prominence, starting with the shorter cycle to the left and basically the most dominant cycle to the right of the chart, okay? Now, to verify that the Fourier analysis was working, I wanted to see if we could actually find the 90-day Bitcoin cycle that I had been tracking in this research. And yes, the 90-day Bitcoin cycle wasn't the only cycle that we were able to find. However, it was one that I found matched with a lot of what Dan was talking about with his 90 degrees and things like that. So it was kind of like a familiar cycle that I was using. Anyway, we have the parallelogram right here, and we have it set to 100, which just means that anything within 100 days is going to track where the cycles are. Now, you got shorter cycles, you got like a little pit here, which could be just like a 2-week cycle. I might have a month cycle, etc. And then we have a 58-day cycle, a 75-day cycle, sorry, and then a 90-day cycle. And the 90-day cycle was basically at the top of this parallelogram, strongly highlighted that there is in fact a 90-day cycle. So yes, not only were we able to manually verify this ourselves, but the parallelogram also identified that there is a strong 90-day cycle. And there we have it, the 90-day Bitcoin cycle. Therefore, now validating what I found years ago, but instead of taking me several hours, I now have a cycle length that I can use into the future. Also, you can use that cycle yourself, okay? I've found it for you. I've shown you how to use it in the past, how to update it. Just go back to the old videos and just update it from then on out. You'll know exactly how to use it. But you can also see there are 2 other cycles here, the 58-day cycle and the 75-day cycle. How they interconnect with the 90-day cycle I've not researched, but you might be inclined to. The 90-day cycle is the most powerful in this range though. You can see it by judging the strength of the bars, and that's basically how strong that strength is, okay? So we have, basically these two are almost equal highs in strength, and then the 90-day cycle is more stronger. Basically meaning that it occurs more often and its start to end dates are more prominent, okay? Now that you have the 90-day Bitcoin cycle confirmed, let's take the sequence higher. Basically, we want to go out now 1,000 bars or 1,000 daily bars to see if we can pinpoint any longer term cycles. When we do this, we come up with a 679-day cycle and an 812-day cycle and a 904-day cycle. Okay, so this has to lie within the 1,000-day one. Obviously, we have the shorter term cycles. You can see all these peaks here. These are all cycles, some more stronger than others. And then you have these more dominant ones towards that 1,000-day cycle. Here now we've uncovered some more powerful cycles. Now I'm giving you these numbers so that you can go in and test these cycles. Again, also use the orb period. I teach the orb period in the GAN Mastery program on how to define what an orb is, and prior videos have also spoken about it, detailed it. So apply your orb period to these ranges when you are overlaying these cycles onto your chart. And now here we've uncovered some powerful cycles. What do I mean by more powerful? Well, basically the longer in time a cycle runs, the more dominant it is. A 2-year cycle can force a 90-day cycle to become invalidated, meaning that it may force the price beyond or in completely different direction to the smaller cycle. That's why when we come out and we're looking for a 90-day cycle to repeat and it just gets completely invalidated, which it has in the past in some of our videos, there's a longer term cycle that's just pushing it, okay? It's just how it works. And the only way for you to verify that for yourself is just to keep researching, okay? Just keep going over the charts and seeing when they invalidate, and you'll see that a longer term cycle has played out. We've got 679, 812, and 904 days. If we try to rework these time periods, we have 1.8 years, 2.2 years, and 2.47 years. Averaging these 3 cycles together, we have roughly 2.15 years, or roughly a 2-year cycle. The other way to look at it is 679, 812, 904 divided by 3, giving us 798 days, or roughly 2.18 years. Okay, so we basically got around just over 2 years in length, or around 2-year cycle, which is the halfway point of that 4-year cycle. Now we want to validate if this 2-year cycle is in fact true. So we've got our Fourier analysis, and now we want to use cycle analysis, and we want to use, in this case, timing solutions because it's got it built in, and we want to see if we can validate if there's a 2-year cycle. And we can see that we have right here around that 2.15 or that 2.1 mark, 2-year cycle. We have a very strong 2-year cycle right here, okay? Then we've also got a short term and slightly longer term one, but that more dominant one, again, we look for those massive peaks where the cycle's playing out the most. We have that 2-year cycle playing out. Okay, so everyone's talking about that 4-year cycle. What's going to happen in 4 years? Well, this 2-year cycle is actually quite prominent. Timing solution uses a different method of calculating cycles, found cycles lengths of 611, 714, 740, and 907 days. Not exactly the same, but provides us 2 different confirmations of these potential cycles. So now we're going to go back to Optima and take a look at longer term cycles. So this is going out even further, and we've done 10,000 days, and it should fully encompass the 4-year cycle that we're very familiar with today. In this instance, we come out with a 1,115 day, very prominent cycle, 1,615 day, the next prominent, so it's picking the top 3 here, and then 2,143 day cycle. Again, that's just the peak. All right, so let's go through and break this down. To understand how the cycles identified in Fourier analysis relate to the often discussed 4-year cycle in Bitcoin price movements, we need to consider a few things. Understanding Bitcoin's 4-year cycle. The commonly referred to 4-year cycle in Bitcoin is largely attributed to its halving event, which occurs approximately every 4 years, or precisely 2,100 blocks. 210,000 blocks. During this event, the rewarding for mining new blocks is halved, effectively reducing the rate at which new Bitcoins are generated. Okay, so you don't need me to go over that, you already know. A 4-year cycle roughly translates to 1,460 days. Understanding this fundamental cycle and its drivers is key to relating it to the cycles found above. So we got 1,460 days, which is basically 4 years in length. Analyzing overlapping cycles, so Fourier analysis helps in identifying dominant cycles in a time series data. The cycles have found 1,155 days, 1,615 days, 2,143 days. So the cycles have found are different to the traditional 4-year cycle. To understand the relationship, look at how these cycles might overlap or interact with the 4-year cycle. For instance, do they coincide with particular phases of the 4-year cycle, like post-halving rallies or bear markets? If we take a look at timing solutions, which is on the chart below, we have found a cycle that is roughly peaking around 4 years, or in this case, ultimately peaks 45 months or 1,380 days, just short of this complete 4-year cycle. And then we also have these other cycles, which between 1,155 to 1,615 day cycle. So here we have it here, this 4-year cycle right in here. We can see it's quite dominant, and then we got some smaller ones in here, okay? These are our smaller cycles. So let's zoom in on the 4-year cycle. We can see that the market's sort of making cycles all the way up into the peak around the 4-year mark. In this case, it's not exactly 4 years, it's slightly less. So we have the 4 years, we've got 3 years, so it's about 3.9 years or so, 3.8 years. And then we got a slight peak at the 4-year one here, and then basically 4.3 years, and then it sort of slides off. So you know that this side of the bell curve and this side of the bell curve, the cycle is not dominant. But in here, we can be looking for tops of some sort, whether it's the 4-year low to high, the 4-year low to low, sorry, the 4-year high to high, or inter-market 4-year swings. Okay, so where are we within that 4-year cycle and what's the market doing? So we can see that there is definitely a cycle that lasts between 3 1/3 to 4 1/4 years. Is it exactly 4 years? Most definitely not, which may suggest the 4-year cycle everyone watching might only be half linked to the halving cycle of Bitcoin. The reason I say that is because the halving cycle is a very static and precise cycle. It's after 210,000 blocks have been mined. But could this cycle, and of course the harder the blocks are to mine, it can extend or delay that cycle. Okay, it's just that's a very static number that they're mining. But could this cycle, in the minds of the investor, only exist due to the fact that the mechanical consequence of the halving event, but it's also driven by trader psychology and market expectations? Okay, you have to remember that this whole report is me suggesting something other than the obvious. Okay. Yes, expectations of what should occur, not what will occur. Anyways, I digress. Let's assume that it does continue. We will keep it in our model. What is the potential outlook for 2024? Let's take a look at this from the perspective of an average investor using the halving cycle for their analysis, which is more dominant cycle, I must add, referred to above. So the 4-year cycle is the most dominant cycle because it is the longest and strongest cycle. Okay, so we cannot just say it doesn't exist. We know it exists, we found it, we have it, okay, it's in the research. This first chart of the 4-year cycle in Bitcoin since inception, you can see that it catches the bottom, but the tops are not so easy to capture. The second chart goes into the future in 2030. So we have bottom, 4 years, okay, bottom, bottom, and so forth. The same cycle is below. I simply move the chart to extend it into future. Remember, the cycle runs bottom to bottom, not top to top. So bottom, bottom, okay? So that brings us out to around 26 to 27, so midway between that time period, where we will get our low for the cycle, okay? And then out to basically 2030 to 2031, okay? Remember, the 4-year cycle is considered the strongest because it is the longest serving cycle, so it would always display dominant in the market. The 600, 800, 900 day cycle paints a slightly different picture here. 2 of these cycles points down into 2024, which are sending the cycle lower, which makes us wonder, if the 4-year cycle begins to no longer hold true, will other cycles become more dominant next year, inverting the 4-year cycle lower? It is not an impossible event, and I wanted to raise it as a possibility. If this is the case, or if the 4-year cycle is less dominant, we may have a year that is not as bullish as everyone is anticipating. And this is that overlaying of those 3 cycles, and we can see that the dominant cycle into 2024 is pushing lower. Now again, we already know that if the cycle is pushing lower, prices still can rise, okay? They still can rise, but it's what is the dominant force of the year? Where does it start? Where does it end? And what, basically a cycle, I want you to think, I'm gonna do something strange here, get up paint. Okay, so a cycle we know does this, okay? You can see it right here, okay? You can see this is the cycle. Then you have prices, and prices move up and down within this cycle, okay? Okay, ideally, prices move down as the cycle moves down and then move up as prices move up. However, that's not always going to be the case. What can happen sometimes is that the market can push up, and then overextend the cycle, can continue going higher, and then it just crumbles, okay, until the cycle resets, and then we get that new upward move. Well, that's not really a good bar or line graph. But what I was suggesting is that despite the cycle falling or providing us a downward bias for a particular time frame, prices can still rise for a certain amount of time before that downward pressure starts to kick in, and then prices actually follow that cycle lower. Does that make sense? I hope it does. Alrighty. So this is an ultimate waveform for this time period, okay? So markets move up. This was the actual, basically cyclical peak of Bitcoin. And then Bitcoin was to be falling into a low. The low was suggested, I had a gain low towards November of 2022. Cyclical low using this cycle here was suggesting possibly first quarter to second quarter. We had a fourth quarter low. However, we can see that prices continue to rise a little bit higher into this downward pressure before the downward pressure kicked into effect, okay? Then we have prices rising, and then they peak out around here, okay? Now, at the time of writing this report, which was October to November timeframe from memory, basically what was happening is we were getting highly anticipated news that an ETF was coming out, okay? My assumption was that this ETF was going to be basically a suckers rally, and that prices were not going to skyrocket to $1 million like everyone was suggesting. As we know now, prices have come out and they basically retested the highs, okay? So they've come up into this range, retested these old highs, stagnated, and have done nothing. And that's basically because we have this downward pressure in the market, okay? Cyclically speaking, we have downward pressure, and we have downward pressure from two cycles. The red one and the blue one, just on this chart, graphically display downward pressure. Then we have this green one, which is singling out in a separate sine wave. So when they all sync up, markets move in a certain way, and then they can come out of sync, and then they sync up again in the future. Okay, this is how all the cycles and all their wavelengths sort of come together. We have two pointing down, one moving up. The green one appeared to have more dominance, however, it starts pointing down as the blue one and red one point up. However, if any of these were to invert, we should be seeing an inversion very soon. The downward pressure for the year was likely, and Bitcoin was unlikely to reach $1 million. That's what I'm trying to get at here. So as a GAN analyst, I often build mass pressure charts. This is a slightly different technique to the one shown on the sine wave chart above. Without disclosing the actual method or formula used, we get the following curves. Okay, so this is using basically the cycles above to build a GAN mass pressure chart. Now, what does it tell us? Well, it tells us that prices are going to start the year rising, and then they're going to crumble, and then they're going to rise again, and then they're basically going to get stuck. What does the end of year tell us? Well, it tells us from the beginning to the end that prices are going to rise. However, it tells us also, or it suggests, it suggests that from beginning, basically up until this range here, we sort of get, if we're looking at the dominant blue one here, we basically get prices stuck in a range, okay? So whilst the ending of the market is higher than where it began, we don't actually have an ultimate bull market playing out, okay? So prices are being pulled back by certain, whatever it is, whatever energy or cyclical pattern you're playing out. This is how we interpret the GAN chart, okay? Prices are rising, but they're stuck in a range, okay? So there's going to be no major cyclical bull market. Now, let's move on. So let's go ahead and explain this. The chart above is a build of the mass pressure chart. You saw this in the forecasting report, which I've given you. Now you have a bit of an idea on the thought process behind it. I decided not to use the standard 4-year cycle like everyone else is doing, mainly because that's too obvious now. So I went looking for potential alternative outcomes, and that's what I do. And that's what I try to teach you as GAN analysts, okay? When everyone is looking at the same thing, it's very unlikely for that thing to occur. So then we need to go, okay, so now that it's too obvious, what is an alternative? Basically what it is. Now, I could be totally wrong, which is what I said, but I'd rather be wrong than possibly lead you in the wrong direction by saying that crypto markets are going to go higher and only higher. Yes, we have an upward trajectory, but if we consider the high around March, end of the year is projected, if projection is correct, the year should end around that level, which means most of the year's gains will have been given in the first quarter of 2024, a very different outlook to what people who are targeting $100,000 next year. I just want you to read this again because this could be nothing but further from the truth on a forecast and my interpretation of the cycles, okay? And this is exactly what I try to just like show you in the Game Mastery program and all these courses. I put together little pieces and I just try to get you to help you put all the pieces together and just form your own opinion, okay? This is a long shot. However, for now, I remain not bullish on Bitcoin. That's a different outlook to what I'll possibly be saying in 2025 though. So I guess we will just need to see how the market goes in 2024. If you're bullish on crypto, then the cycle suggests a low around April 2024, followed by the following chart is the typical 4-year outlook, which is what basically everyone uses. So the typical outlook for 2024 based on the 4-year cycle, which is what all your YouTubers and everyone is using, is markets rise, they fall into April, and then they just basically end higher. So you have your low to high, and you can see that the trajectory of these highs just keep getting higher into the end of the year, and the market ends higher. Okay, ignore the price scale, that's just through the software. However, market ends higher. So why am I telling you this? Well, I just want you to know that there's more to this whole theory than just what people out there are telling you on these YouTube videos. Such as, I'm not going to name drop anyone. We have Australian crypto enthusiasts who just do nothing but drop videos daily. They have hundreds of thousands of subscribers, and they just try to predict the future using these simple yet ineffective GAN-based theories which they learned from someone else and they don't really know how to apply. And I've been trying to help you this whole freaking time just to see things a little differently, okay, just through my eyes, if that is at all possible. So let's go ahead and head over to the energy levels. I did say that I would give you the energy levels out to the next ingress date, which is going to be December 22nd, okay? So prices at the moment are in a decline, okay? If the bottom is going to occur, the bottom is going to occur around the 22nd of September. If the bottom is going to occur and prices continue to decline, they're going to occur around 22nd of September, okay? And then prices should increase from there. And I'm going to overlay this now with the energy levels. So the energy levels are below zero here, okay? The price continued to rally when we had a very steep decline in the energy level here. So basically what's happened is energy has caught up to price and prices have just been brought down. This is the McWhirter theory, okay? This goes back to what she teaches in her book. I'm just giving you an interpretation of that, okay? Now the energy levels are still below the zero line, so the zero line is this black line here. Anything above it is positive territory, anything below it is negative territory, which means that prices, energy related, are brought down, okay? What do I mean by energy? You know, we know Louise McWhirter was into astrology. That's what she uses. This is information on astrology, okay? So based on the lunation, so the new moon to full moon or full moon to full, new moon to new moon or new moon to full moon, at each of these lunations, we get a planetary energy level, which is basically, are they positively or negatively aspecting each other? That energy level is applied to a chart, and then from that chart, we can then go ahead and gauge if we're looking to be bullish or bearish for a particular time, okay? So while it's below zero, we have a bearish tendency, okay? So now we can see that the energy levels are waning, which means that, sure, prices can go up, but they should have a negative bias in them, okay? Prices should be pulled down more so than they're rising. However, what we have here is this massive peak from negative to positive occurring right here. So the forecasted curve is going to be prices possibly roll down into around 22nd of September. If they don't roll down into 22nd of September and the market peaks out on 22nd of September, it's just bearish case. That's what I'll be playing. But if we roll down into 22nd of September and move up into October, there could be a case of positive energy around the 2nd or 3rd week of October. Okay, so from the 17th to the 30th or to the 1st of November, basically we have positive energy, quite a high range compared to what's happening in this negative energy, and then it just drops off. Okay, so a low to a high, and then markets just stabilize and sort of go nowhere or downward bias from here on out. So I hope that sort of gives you a clearer picture on what I have been looking at, what I forecast out into the future, the viewpoints I have. I'm not always going to get it right. Things can go wrong. When you're doing daily forecasting or intra-month forecasting, you're going to get the moves wrong eventually. But the longer term pictures, I'm going to tell you, without the use of any technical analysis, I have been the most accurate when it comes to these cycles from what I can gather. Again, everyone is telling you that Bitcoin is going to head to $100,000. Everyone bought into the ETF rally. People are still piling into that ETF. Every time an ETF or an options contract comes out and everyone says, oh my God, this new exchange has just released an ETF, that does not signal a bull run in that asset. Generally, it means that the market has already run and the big boys are now trying to play catch up. Okay? Big boys usually play catch up at the end of the cycle, and they sell you these ETFs. They make all their money, basically, however ETFs make money. They make their money as the market goes into overdrive, and then the markets just tumble and crash. Generally, what happens, we've seen it more often than not. Now, I'm not saying that Bitcoin goes down to zero and doesn't ever recover. I'm just saying usually when that event occurs, it's the top. And I tried to tell you that in the video that I created, which said that the rules have changed. And I did that basically at the start. I think it was probably like January. I can't remember when. The rules of the Bitcoin gain have changed as soon as those ETFs launched. And you can see the effects of that now. You've seen the effects. Anyway, I don't know how long this video is, 30 minutes long, golly gosh. That's just an overview, that's just an update on Bitcoin, my thought process for 2024, where we are now, what's likely to occur into the end of the year. If you want to learn how to do this yourself, I do teach it, okay? I'm not going to say that the course is fully produced yet. The Game Mastery program is in development. The courses that you can buy individually are currently the Time by Degrees course and also the McWhirter course. The only way to get access to my yearly forecast, where I document the whole year in advance, is by being part of the Game Mastery program. That's kind of why it's a more of a higher priced tiered program, because it will give you access to things that are not available anywhere else or sold individually. And right now, if you are struggling to get access to it, but you really want to learn how to do this for your own means, then I've currently got it 50% off for you. You can just use the discount coupon code. It's called Rare Discount, or you can find the link in the recent YouTube comment, or I'll leave it below in this video. That's just, yeah, the choice is yours. I'm not going to force you. Options there for those. I had many people reach out, and I'm just giving you the ability if you want to. Up to you. That's all I have. Talk to you again.